We have some significant catalysts coming up at the market and we need to talk about it. I am Dr. Stock, Doctor of Education, and this joke is for the 90s kids out there. Do you know why Fish made it as a band? It's because they really knew their scales. I hope everyone had a great weekend. I know that I did, as it was my birthday weekend. I hope that you also had a great Monday in the markets. I know that I did as well. I will tell you about those results later on in this video. I will also tell you about the indices, what I see coming up. We also have to talk about some of the economic catalysts that are out there as well. And then also we'll go through some charts, some technicals. I will tell you where you can see my buys and sells and how I am playing this market. I will also tell you about my Tesla stock price prediction and earnings projection that you can see right now over at the Patreon. Also about my options course and how you can do technical analysis like I do. In the meantime, looking at the economic numbers on Trading Economics, we actually have to go all the way down to Thursday for what's, in my opinion, the first big catalyst that we have, and that's GDP. And we want to be on the lookout for that 8:30 a.m. on Thursday. And what we see in the forecast, the consensus for this is 2%. And I can tell you from 2009 to the last one that we got, 2% is about right. So whether it's the pandemic that's in there with it, that's about 1.9%. Without the pandemic in there, we see about 2.1% growth. So that 2% right in between, threading the needle for that consensus. This is a very safe number to put out there. We don't want to go south of that. That's going to be downward pressure on the markets. Going north of that is going to be upward pressure on the markets, but not so much so that it signals to the Fed that more tightening or staying higher for longer, I should say, is something that's going to be in the best interest for the Fed to keep their federal funds rate up as high as it is. So we need to be on the lookout for that. And so durable goods orders can also be indicative of retail strength, and we want to be watching for that for signals about what the consumer is doing. That's also going to be something impactful to us. Initial jobless claims last month came in at 187, and that was a very low number, and that kind of rattled the markets a little bit. We're going to have to be looking for that. That is good to have that tight labor market, but remember what the stock market wants right now is for the Fed to be satisfied so that they start cutting rates sooner. And so that's going to be that thing that's going to be that big driver for what we see in the markets, especially where the Russell 2000 is concerned, which brings me to one of the plays that I made on IWM. I'll tell you that towards the end of the video here. Let's move on down to Friday because we have personal income and outlays. Part of that is PCE. We want to be watching these numbers to see them come in. We want to see them come in slightly under consensus. That would be a good thing for us. We don't want to see them go negative, especially not month after month after month. We don't want to see that, but we do want the low numbers that bring us back down around that 2% inflation. Anything that's going to be good for feeding into the Fed's meeting, which takes place next week, January 30th and the 31st. So that's also a catalyst to put on your calendar to look out for that. So Thursday and Friday are going to be big days in the market. I wouldn't be surprised to see a little bit of red on Wednesday going into the market, or even the pre-market hours on Thursday leading up to that GDP number. I think that's going to be absolutely huge for us. And I also do want to point out that on Wednesday in the after hours, January 24th, is when we have those Tesla earnings. With that said, I want to get into the charts. We'll talk about the indices. I do want to talk about Tesla specifically in there as well. So we're going to kick things off with SPY. So tracking the S&P 500, and you can see I've adjusted my technicals on here a little bit. I still think that we have this rising wedge pattern taking place. I still think that there could be a drop coming, but this crisscross that we have, the first one here is around 492, and then the next one that we have out here is at about 500, which either one would be absolutely incredible to see the market continue to run. I don't think it happens without GDP being good for us to really satisfy the Fed. So we're going to see that strong growth in the economy, continue to see that GDP expand, but not so much to the point where the Fed has to feel like they have to stay higher for longer. The more that they push out those months, the more downward pressure it is that we have in the market. So we're going to be looking for that, watching out for it. You do see that we got rejected off this top trend line here. Let me zoom way in and I'll stretch this out so you can see a little bit better to see that rejection that we got. But after such a strong day to close the week on Friday, it's natural to, even though we're up a little bit, to have this red candle come in and have a little bit of hesitation in the market, if you will. So we're still up about 0.2% in the S&P, not bad at all. But you do see that hesitation, unlike that rampant day that you had, because we had a lot of up over the past several days. So now we're kind of resting a little bit, kind of adjusting, and we'll see what happens from there. When we go to the Qs, it's a lot the same story when we look at it. So again, I adjusted the technicals here to update it to accommodate the new peak that we have. Let's stretch that out so you can really see it on your screen. And once again, for this one, where did we end up? We ended up about 0.13% up in the NASDAQ. And this is the NASDAQ 100, by the way, which includes BigTech. And we saw a lot of run up in BigTech. And that also reminds me that I said that NVIDIA would sooner hit 500 than 600. Well, the market made me wrong again on this one. So the high on this was 603. So I gotta take a nice slice of that humble pie on this one that I was wrong, that we did hit that 600. We did retreat from that to close at 596.64. And we'll see what happens next with NVIDIA if we return to this trend line that we have here. Their earnings, by the way, if we click on this little E symbol that we have down here, February 21st for earnings. So we are in the overbought territory on this one. And to see that softness come in, if you look through a lot of big tech, you're going to see that there was not a lot of huge movements. Apple actually had a decent day coming off the double bottom that they have on the hourly chart when we look at it. And if we go out to the daily chart, you can see the significance of where they were at, especially if I reset the chart view here so you can see it, that both times that double bottom that we got came off the 200 day, just above it there, came back through and tagged just down beneath it. And I said that that would be a strong area of support for us that we could take a good healthy bounce off of, and we most certainly did. And so now we are on the RSI in the bullish territory on this one on a daily basis. And you can see we did peak a little bit and then pulled back throughout the day. So if we go out to the weekly chart still looking bullish as well. We could possibly make it to the top trend line that we have up here. What does that mean? That means for Apple leading up to their earnings, which by the way, I think are in the after hours on February 1st. Here we'll find out. After hours, oh my gosh, February the 1st, that's what it is. So making that up to here, maybe we see the run up in those earnings, which would also be good for the market to see Apple lead the way up that way. We'll see if they also happen to fall short of that. And if they do they come down and they retest this dark blue line that you have through here, which is that 50 period simple moving average. That's actually kind of a hard color to see. So here, we'll change it up for you. Let's make it a brighter blue, easier to see. There we go. Now it shows up a little bit better on the screen that you can see that coming through. Come back down, retest the 50 right at around that $190 mark, and then rally back upward from there. So we'll see if we get that bounce off the 50, continuing a bullish direction. So Tesla, I want to make sure that I talk about here because of their earnings that are coming up on Wednesday in the after hours. And you can see the head and shoulders thing, it might still happen. The verdict is yet to be set on that one. We might actually be seeing a decent double bottom here. We're going to have to wait and see. And so I do think leading up to those earnings, it'd be highly possible that we see 200 pop out of there, especially if we see the market continue to pull back between now and then. So we'll see if we pull all the way down to that 200. If we do, that can be a strong area of support where we get a good, decent bounce off of that. We're below the 200 day. We're also down below the 50 EMA and SMA. So right now, there's a lot of bearish signs out there for Tesla, and we'll see what their earnings bring. I would say that it's not necessarily an area where we're out of the woods yet with Tesla. And we know at the last earnings call, I don't think that Elon is going to come out, and I don't think that he's going to give the same doom and gloom report that he gave for the last one. I think the last one kind of riled the markets. I don't think that he's going to come out and be afraid and cast all sorts of doom and talk about high interest rates. I mean, there might be some of that, but I think there's going to be a lot of good news out there. We do need to be careful about how many deliveries they come out and say. We need to make sure that we're still on a strong path for deliveries, and we'll happen to see it probably does mean a hit to the margins that we have. Cybertruck is also something that was said to drag on those margins as well. And I do have my Tesla stock price prediction and earnings projection over at the Patreon. So that link is down in the description. You can click that and sign up. And when you do, you'll find the Tesla stock price prediction and earnings projection over there, as well as a video, a 9-minute and 13-second video with my commentary on the projections that I have and also what I think about those earnings. And you can also get my options course, which is what I use all the time to add alpha to my portfolio. And if you want to do technical analysis like I do, you can do that by using the link down in the description. For massive savings, you can use the coupon code TRADE, TRADE. Type that in for the massive savings, and I'll tell you what, it is an awesome, clean-cut, easy course to follow. There's also a Discord that goes along with it. You want to check that out. I'm over there. Stockmo's over there. There's live teaching sessions that also happen over there, and I have a chapter in that course as well. So go ahead and check that out. So with that said, let's get back into the technicals. I want to bring up SoFi because this is one of those plays that I'm in right now, long on SoFi, up about 30% in the call option. At one point in time, I was up about 50%. Not ready to exit it yet. It's one that I think we're going to have a nice run up leading up to those earnings. If we talk bread recipe for technicals on this one, what are we looking at right now? Well, the 5 is heading up towards the 13, not crossed it yet, so it's actually a bit early. Should we follow the exponential moving averages for that? The 13 has crossed down below the 50. We're also down below the 50 EMA that's on here and SMA that's on here. We are up above the 200-day. That's a good thing. Now, mind you, we've dipped down below the 200-day before, and we've had wonderful rallies off of that. I think this is going to be another one of those times that SoFi has a wonderful rally off of that. Like I said, I'm up 30% in that position already. That is still open, so that's an unrealized gain. And so end phase is another one. When we talk about solar stocks, sold off a lot lately, although I think they're still on their upward trend, breaking this long-term downtrend that they were on. I don't think that they're going to return to it. I think they're going to find supports. And if you look at solar stocks across the board, you're going to see a lot of the same look in that. So a few of the plays that I was in, I told you I would share those with you. One of them that I closed out today was IWM, so Russell 2000 ETF. That one, I closed at 53% profit. I opened it up, I believe it wasn't Thursday, it was Friday. So 1 or 2 days of last week into today, closed it out, 53% profit. Another play that I made was on Trade Desk. And that one, I closed that one out, 47% profit. Carvana is one that I did not get a chance to make a play on before that thing already ripped up. I was ready to go at $42 per share. And then by the time I came back around to it, it was 45. I was like, I don't know if I want to make that move. Today it was 48. So if you watched my video on that last week and if you were able to take advantage of that, let me know down in the comments because I would absolutely love to know that I was able to help bring your attention to that. Remember, I never tell you what to buy or sell, but I do make sure that I bring to you as much opportunity as I can find in the markets all the time here on YouTube. And if you want to see more of that and the plays that actually take advantage of, that link is down in the description for the Patreon. And then, like I said, that also, if you need technical analysis like I do, that link is also down in the description as well. Make sure that you use the coupon code TRADE, TRADE, to get the discount on that. It does only last for a few more weeks yet, so make sure that you take advantage of it. Like I said, it won't last forever. I'm gonna let you guys go. Thank you very much for watching. I really do appreciate it. As always, I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.